Good morning, students. Welcome back to this session on advanced accounting. So today we'll continue with our discussion in relation to amalgamation. So we are left with some part of it. And as per today's agenda, we will also be starting with the consolidated financial statements. So in terms of consolidated financial statements, today we'll be talking about AS21. Okay, so that is in relation to consolidation of a subsidiary. So that is how this agenda for today is planned. Yeah. So first of all, let's wrap up this amalgamation part. In the previous session, if you remember, we picked up one question, and in relation to that question, we looked at the book closure of the transfer company. And today we will be looking at the accounting entries, or you can say books of accounts in respect of the transferee company. Plus, we'll also be looking at questions in relation to both these methods, pooling of interest method and the purchase method. Okay. So before we really get on to this, let's quickly do a recap. So everyone, if you can just let me know as regards AS14, okay, and as regards this amalgamation that we discussed, what all points are relevant. So can you just start sharing some of the points quickly, one by one? Yeah, everyone, please share your thoughts. So in terms of amalgamation, what did we discuss? That amalgamation is a type of, you can say, merger, wherein two companies can come together and one company will come to an end and the other company will stay. Or maybe two companies can come to an end, they can get merged in third company. So that is about amalgamation. Any more thoughts on this quickly? Yeah? Everyone, you need to participate on this. Everyone, please start sharing your understanding of amalgamation that we discussed, and then we'll move on to that question also. The next part was that in amalgamation, there are two types. One, which is in the nature of merger, for which certain conditions are required to be satisfied. I would request you to share those conditions. And we discussed that only if all those conditions are satisfied, amalgamation will be considered as the one in the nature of merger. Otherwise, what would it become? Can you tell me? Otherwise, what would it become? Over to you quickly. If the amalgamation is not in the nature of merger, what type of merger will you call it as? Over to you quickly. What type of merger will you call it as? Yes, waiting for a response. If in case amalgamation is not in the nature of merger, what does it become? Kiran is saying acquisition. Okay, Pratima is saying in the nature of purchase. Yes, very good. And now, in relation to amalgamation in the nature of merger, can you tell me which method will be considered for the purposes of amalgamation? Which method will be considered? What do you call that method as? In relation to amalgamation in the nature of merger and also for amalgamation in the nature of purchase, which method do you apply for accounting purposes? For both, Pratima is saying for merger, it's pooling of interest method. Kiran is also giving the same answer. Very good. And in respect of purchase method, which type of amalgamation do we consider? It's the amalgamation in the nature of purchase. Okay. Yeah. So this is how you connect it. And I think Rashmi has also shared the same response. Great. Now, as regards this purchase method, pooling of interest method, we are going to look at some questions. But before that, let's get on to the question that we were discussing that day, and over which we also discussed the book closure of the transfer company. Okay, so in the previous session, we closed the books of the transfer company. So today, what is it that we are going to do? So today, we will be looking at the accounting in the books of transferee company. Yeah, okay. So today we'll be looking at accounting in the books of transferee company. So now, if you remember, transferee company was whom? Y Limited. Okay. So Y Limited was the transferee company because Y Limited acquired the business of Z Limited. So in respect of Z Limited, its books of accounts were closed. Okay. So it has come to an end. Everything is settled. And how do we close the books of accounts of Z Limited? By opening revaluation account. And in respect of revaluation account, we discussed that first of all the assets, liabilities of Z Limited will move to the revaluation account. From the revaluation account, profit or loss may be generated, which will get passed on to the equity shareholders of Z Limited. Okay. And along with this revaluation account, another account is very important to be prepared. So I'm not talking about the journal entries. We discussed that whenever you will close the books of a company, two statements, or you can say two types of accounts should be prepared by you every time, just to avoid any error. So one was the revaluation account. Can you tell me what would that account be? Okay, what would that second account be which needs to be prepared always to avoid any error? Over to you. Srinivasan is asking, sir, the revaluation account or the realization account? Can you please clarify on this point also? What do you call it as? A realization account. But in some cases, yeah, you also call this as the other one. Okay, yes, very good. So Pratima is saying it's called as cash account. It's called as cash account. Okay, so now the books of the transfer company were closed that day. Yeah, those were closed. And what was the amount of consideration which we computed that day? Now, these numbers we need to remember. Why? Because all of these things will be used by the transferee company. Yeah, so if you remember, this consideration was what amount? This consideration we discussed was what amount? This was 17,20,000. Okay, just give me a minute. This was 17,20,000. Fine. All right. So now this is what we had. Okay. So now this is going to be used by the transferee company also. Other than that, there were some adjustments. So let's quickly look at those adjustments. Okay. Though you can always look at this question. Yeah, it's also available. Now, what were those adjustments? Y Limited had taken over all the assets except cash, all the liabilities except interest which was due on debentures. And one more point was that when it comes to the reserves, in the reserves, we had discussed that the reserves included an element of liability as well, which we had taken to liability that day. Okay. So this was again taken to liability that day. Okay. Now I think some of the other points we remember. That was about settlement of preference shareholders, equity shareholders, and there were some expenses related to liquidation also. So now let's get on to the books of accounts of Y Limited. And these books of accounts of Y Limited will be prepared at the time of takeover of Z Limited. Means when Z Limited is getting acquired. Okay. So now some of the numbers that we computed in respect of Z Limited, we are going to use those numbers. Okay. So we'll just leverage on that part. Fine. So now I'm just moving on to the accounting entries in the books of Y Limited. So now when Y Limited will acquire something, okay, Y Limited is getting the business. Along with that business, what is it that comes to Y Limited? What is it that comes to Y Limited? Assets, liabilities, correct? for which Y Limited will pay some consideration. So now, as a first step, what do we need to do? We need to debit the business purchase account. Okay, I think Rashmi had a comment. Rashmi, so when it comes to the liquidity, I think you mean to say the liquidation. So liquidation is in respect of Z Limited, means the transfer company. But now we are talking about the transferee, not a transfer. Understood? Okay, so now what is the first accounting entry Y will pass? Y will say business purchase debit to liquidators of Z Limited. Why? Because this is a liability which Y Limited will be required to pay. But where does this amount go? Yeah, so this consideration will go to the shareholders of Z Limited. Now you may be thinking that this amount is payable to shareholders of Z Limited. So you are correct. But the liquidator will distribute all of these things which Y will provide to the shareholders of Z Limited. Okay, so that's why when it comes to the credit side, what is it that we are going to credit? The liquidators of Z Limited. Okay, so now Y has booked the liability for 17,20,000 and Y has also booked an asset which is around business purchase. Now we'll have to just get into the split of both these items. So when I'm saying both these items means both of them. Okay, both of them. So what do you mean by split? Means in terms of business purchase, assets will come, liabilities will be taken over. So Y will record that. Similarly, in terms of liquidator account, Y will be required to pay the consideration. So that will also be settled. So we'll have to close these two accounts also. So now as a first step, what is it that Y will do? Y will record the assets which are taken over. Assets which are taken over. Okay. And in respect of the assets which are taken over, what is required by Y? Y will require to record these assets and the liabilities at agreed values. At agreed values. So now if we go back to the question, so what was the agreed value in respect of some of the assets and liabilities? Okay, so now if you look at the agreed consideration, the agreed amount, land and building was acquired at plant and machinery. But if you look at land and building, it had a book value of 4 lakh. Plant and machinery was agreed at 6.5 lakhs, but it had a book value of 6 lakhs. Similarly, if you look at patents, these were agreed at 20,000, but in terms of books, these are appearing at 50,000. So now, will the transferee also record them at book values? No. Why? Because transferee will record them at the amount at which transferee will acquire. Book values were required by the transfer company. Why? Because transferor had to de-recognize all of these items from its books and then record a gain or loss, if at all it recognizes in the books of transfer. As far as transferee is concerned, such of the things will not be required. Okay, yeah, so all those things will not be required. So now we can just simply go to the books of transferee. So now transferee will say assets acquired at agreed values. So land debit 5.5, plant and machinery 6.5, patents 20,000, inventory at book value. Why? Because agreed value is same. Trade receivable 1,80,000, again book value. Goodwill you can ignore for the time being. Okay, goodwill you can ignore for the time being. And the liabilities which are taken over. So what all liabilities have been taken over? Trade payable, yeah, liability in respect of workmen compensation reserve. Yeah. Debentures in Z Limited, because this is also a liability which will be taken over. So it will be settled, but first of all, this liability is taken over. Okay. And business purchase account will have to be credited now. Why? Because against the business, all the assets and all the liabilities have been recorded separately. So you can say split. You can say split of business purchase has been captured through this accounting entry. So now business purchase account comes to an end in the books. Okay. Now, when the liabilities are taken over, assets are taken over, so any differential amount between these, why differential? Because the amount paid to acquire business as against the values at which business is acquired, we discussed where do you take it in case the purchase consideration is higher or lower as against the assets and liabilities which are taken over. Where do you take it? Over to you. In that case, where do you take it? In that case, where do you take it? Okay, Pratima is saying goodwill. So it will be either goodwill or capital reserve, because I talked about both, higher or lower. And can you tell me, very good, Pooja has answered this. Okay, and can you tell me that because we are recording goodwill in this case, okay, so in this case, it's goodwill. It's the balancing figure. We can also compute it separately because it's goodwill which is recorded in the books of transferee. So what type of method will you call this as? And which type of amalgamation you will call this as? Over to you. Now, considering the fact that we are recording a goodwill, so which type of amalgamation this will become? Great. So Pooja is saying, sir, this will be amalgamation in the nature of purchase. Pratima is saying, so Pratima, you need to revisit. In case of amalgamation in the nature of merger, can we have goodwill or capital reserve? Can we have goodwill or capital reserve? No, we cannot have goodwill or capital reserve. So that's why whenever you are recording goodwill or capital reserve, what type of amalgamation that will become? That will become amalgamation in the nature of purchase. Yeah, because only in the nature of purchase, wherein you use purchase method, goodwill or capital reserve will rise. In the case of amalgamation in the nature of merger, can we recognize goodwill or capital reserve? Tell me, yes or no? Pooja is saying in case of merger, we recognize the impact in general reserve. Rashmi is saying no, goodwill or capital reserve cannot be recognized. Okay, I think same is the response from Shivanna, Preeti, and Unni Krishnan. Very good. Yeah. So now let's move further. Okay, so now assets and liabilities have been recorded. Now, what Y will do is Y will pay the liquidators. So now liquidators are paid in three forms, if you remember. And I understand Mohammed had a query in the previous session. Mohammed was saying that, sir, these equity shares have been issued at premium. Okay, so let me just take you to this question. Mohammed was saying that, sir, it says this point. Okay, so this was the query. And you can just look at the query of Mohammed of the previous session. He was saying, sir, equity shares which are required to be given as part of settlement by Y Limited. Okay, so they will be given at market value of 140. So the face value is 100, but they are given at market value of 140. So why is that transferee company is not recording any security premium? Okay, so that was the question. Yeah. Now let's try to understand. let's try to understand as to why will that not be done by transfer and why will that be done by the transferee. So now transferee is recording the settlement. So liquidators will be debited. A part payment in the form of cash will go out to them. Preference shares will go out to them. Okay. And the equity share capital. So if you combine this amount, this was 11,20,000. Okay, Mohammed, if you are there, this was 11,20,000. But out of this 11,20,000, 3,20,000 is what? This is the amount of premium. And who will record this premium? Obviously, transferee company. Why? Because transferee company is issuing shares. Who is issuing shares in this case? Transferee company. So that's why security premium will be required, will be recognized by whom? Transferee company. Understood? Clear? Yeah. Okay. Srinivasan is asking, sir, how do we find in the question whether it's in the nature of merger or purchase? See, by applying those 5 conditions. So that's the only way you will have to find. Okay. Now, these debentures, they will have to be paid off. Okay. So debentures will be debited. And against these debentures of Y will be issued, but at a premium. So that is also settled. Now, as a next step, liquidation expenses, partly, if you remember, liquidation expenses were 12,500, but a part payment equivalent to 10,000 was made by Y Limited. Y Limited equivalent to 10,000. So where will this impact go? This will also go to goodwill account. So why will say goodwill? Because this is again an extra consideration, or you can say a kind of extra amount which is moving out from the books of Y to the liquidators, or you can say to the transfer company. So where should this impact go? Goodwill. Okay, this impact should go to goodwill. Yeah. So with this, what is it that Y has done? Y has recorded the adjustment in relation to this takeover, this amalgamation, or you can say this acquisition. Rashmi is asking, sir, security premium recorded by Z means transfer company. See, Z is the transfer company, but security premium recorded by Z will be incorrect. Will be incorrect. In this case, whose books of accounts are we looking at? So we are looking at the books of accounts of transferee company. Which company is that? Y Limited. Y Limited is required to issue equity shares. And if these equity shares are issued at premium, what do you call it as? Security premium. And therefore, who will record this? Transferee company. Okay. Clear on this? Yeah, Rashmi? Great. All right. Yeah. So, any questions on this? Because then we'll pick up another question. Okay, so we are not done. So we'll pick up another question wherein we'll discuss both the methods, merger method and pooling of interest method. So in that question, our focus will be on the accounting entries which are required by both these methods. Okay, clear? All right. So now I'll move on to this next question. So let me just pick up this next question now. And I would again suggest that this next question should be solved by you. Okay, so we'll be solving this question, but you should attempt to solve this on your own. Okay, so now in this question, we are given balance sheets. Okay, sorry, I have few questions coming up. Preeti is asking, sir, for liquidation expenses from the point of view of vendor company, please explain. Yes, sure. See, for liquidation expenses, if you are looking at the books of accounts of vendor company, okay, so now vendor is getting some amount from the vendee. Who is the vendor? In that example, Z Limited. So Z Limited will get cash. Z Limited will get cash. Okay. And where should this impact go? This will go to realization account. Okay. So you can just go revisit the accounting entries we discussed. So this impact will go to realization account. Okay, Preeti. Srinivasan is asking, sir, in case of vendor, 9 journal entries were there. But in transferee company, only 5 entries are there. Why? Because transferee company has not closed its books. Transferee company is going to continue. Transferee company is only required to record the business. So there is no mirror accounting which is happening. Please understand. Huh? So at one place, you have a company which is shutting down, coming to an end, getting liquidated. Everything will be settled off. But at another place, you have a running company which has taken over business of this company. Yeah. So obviously there will be differences. And if you just want to look into all of these accounting entries, you can just put together, look at the differential accounting entries. Okay. So when you are saying 5 entries have not been passed by transferee, I would suggest you need to highlight. Okay. And you need to understand that should transferee company really pass these accounting entries, you'll get the answer. Okay. Okay. I think Shivanna is looking at another illustration. Yeah, sure. Sure. See, there are a lot of illustrations which are available in the study, of course, and which you may be looking at. Yeah. But please understand each and every illustration, definitely it is not picked up because of constraint that we have. But if you have any specific questions on any of them, just feel free and we'll just keep discussing those questions. And alongside some of these questions we are picking up are to ensure that each and every aspect in respect of accounting gets covered. Okay, so that is how we are just planning it. But definitely we can look at the questions, doubts, and as the time permit. Okay, so once we are through with some of these things, including the thing that we are going to cover today. Yeah, so as the time permits, so in our spare time, we'll be picking up more and more questions. So don't worry about it. Yeah. Okay, so now let's move on to this question now. Consider the following balance sheets of X and Y as at 31st March X1. Okay, so for X, share capital, reserves, long-term borrowings, trade payables are there. And please remember the numbers are in thousands. Okay, numbers are in thousands. So trade payable is there. Then we have other current liabilities. And of course, in the notes, you'll have a split of all of these items. Then we have PPE. Then we have non-current asset, non-current investments. Yeah, for which companies X and Y. So currently this is the information that we have. Okay, then you can see the notes to accounts in relation to the financial statements. So share capital comprises of again 2 things, equity and preference shares. Then in the reserves, again, we have different types of reserves: general reserve, export profit reserve, investment allowance reserve, P&L. Then we have long-term borrowings, which is debentures. In terms of PP, it's land and building, plant and machinery, furniture. Then we have this additional information, and I would say this is important. Okay, so you need to read the information carefully. Yes, Rashmi. So you can always see some of these questions if you want. You can always look at study material also. Okay, so that's why I've kept the number also same. Huh? Please feel free to do that. Okay. Yeah, so it's question 8. Yeah, illustration 8. X Limited takes over Y Limited. So now 2 companies are given. X Limited takes over Y Limited. X Limited discharges the purchase consideration as below. Equity shares are issued at par to equity shareholders of Y. 15% preference shares are issued to discharge preference shareholders of Y at 10% premium. Please remember, these are issued at 10% premium. Okay. Debentures of Y Limited will be converted into equivalent number of debentures of X Limited. Means debentures will be settled through this way. Statutory reserves of Y. Now, this is going to be another very important aspect. Statutory reserves of Y are to be maintained for next 2 years. You are required to show journal entries and balance sheet of X Limited. Now, books of accounts of X. Can you tell me who is X? Transferor or transferee? Over to you. Can you tell me about X? Whether X is transferor or transferee? Tell me. Who is X in this case? Transferor or transferee? Okay, so I think Santo is saying transferee. Pooja, Pratima, they have the same answer. And Rashmi has got the same answer. Kiran has got the same answer. Very good. So now in the question, please remember, okay, though this appears to be very, very simple to you, but if you don't assess these two companies in terms of whether they are transferor or transferee, what will happen? Overall accounting will go wrong. Yes or no? Because for transferor, books of accounts are required to be closed. But for transferee, books of accounts will not be closed. In fact, its accounting will be done and its financial statements will be prepared. Okay, so every time the question will ask you this information, balance sheet of transferee, including journal entries. Okay, but when it comes to the closure, when it comes to the vendor or the transfer, generally question will not ask you for this balance sheet. Why? Because that is going to come to an end. So there's no point preparing the balance sheet and then closing it. Okay, so that's how it will be required to be looked at. So I think Rashmi, you can just find this illustration 8. Okay, so you can just type illustration 8. Otherwise, you can just look at it. Okay, so some of you are looking at the study material, you can just go and look at illustration 8 in respect of this. Okay, now in this case, we are required to draft journal entries, balance sheet of transferee after amalgamation. Now, please remember, this is after amalgamation, means after incorporating the effect of amalgamation. And in this case, question has specified, consider this amalgamation to be one in the nature of merger and amalgamation in the nature of purchase. Okay, means under both the methods, you will have to give the answer. Now you may be thinking, but sir, how do we decide this? So you don't need to decide. If the question is specifying this, okay, so in this case, question is talking about both the methods. But if it means the question is talking about nature of merger or nature of purchase, so you should not think that it will not become nature of merger or nature of purchase. You will just fulfill the requirements of the question. Okay, yeah, so we'll just go by the requirements of the question. So now, if it's in the nature of merger, so let's understand what are the requirements on the part of transferee. Once again, what is it that the transferee will do? Transferee will record business purchase and say a liability is booked in respect of the vending or the vendor, transfer. And this consideration will have to be computed. So I think we'll have a working note in respect of this consideration. So let's get on to that working note to get on to the amount of that consideration. Okay, so now where do we have this consideration? All right, so we have this purchase consideration over here. And I would suggest you to solve this on your own, please. In terms of consideration, two amounts have been paid. What is the first amount? Equity shareholders. Equity shareholders have been settled. And how have those equity share been settled? Okay, so let's get on to the question. 3,50,000 equity shares have been issued at rupees 10. At rupees 10. So what does it become? 3,50,000 into 10, 35 lakh. Okay, so that is first. Number two, issued 15% preference shares of rupees 100 each to discharge preference shareholders of Y Limited. So now we need to find out that how many preference shareholders or how many preference shares are there in case of Y Limited. So it says 17 lakh. 17 lakh of rupees 100 each. So that means there are 17,000 shares. There are 17,000 shares of Y. Okay. And they will be discharged at a premium of 10%. They will be discharged at a premium of 10%. Okay. So let's get on to the consideration. Now 17 lakh plus 10% of 17 lakh. What does it become? Can you tell me? 17 lakh plus 10% of 17 lakhs because it is at a premium. So what does it become in terms of amount? Can you tell me what is going to be this amount? Yes, over to you quickly. Pooja is saying 18,70,000. Very good. 18,70,000. Yeah, Pratima has got the same answer. So all in all, in totality, so these two amounts have gone out. Okay, these two amounts have gone out. So that's why what is going to be the amount of purchase consideration? 53,70,000. 53,70,000. Clear on this? Yeah, I think Sento also got the same answer. Great. Yeah. All right. So I think Rashmi has got the same answer. Okay. So now purchase consideration we have computed, and please remember that even if the question will not ask you for this information will carry weight. Weightage of what? Marks, of course. Okay. So all these workings should form part of your answer. Now, in this case, okay, I'm specifically highlighting this point. Why? Because in this case, there was no complication as around this purchase consideration. Okay, so if one has to compute this amount, it's going to be very simple. And in the exam, you may think that this computation is going to be so simple. So why to create a working note? Okay, so you may just do this in rough and you may just want to give the accounting entry with this amount. That should be avoided by. Okay, so you should try to bring in the working notes. Okay, bring in the working notes. So at times you may have additional working notes. It doesn't matter. Huh? It doesn't impact. So if let's suppose you put down 5 working notes, 7 working notes, that is absolutely okay. Understood? Yeah. Okay, so now let's go to those accounting entries. Now, in terms of assets which will be acquired, so what will transferee company do? Transferee company will say assets debit. So now it is 66 lakhs. So how do we get 66 lakhs? We can take the total of all assets which have been acquired. So which all assets have been acquired? PPE 36 lakhs, non-current investments 5 lakhs, inventory, trade receivables, cash and cash equivalent. Okay, so this is what? 66 lakhs. Okay, so either you can record them individually or you can always call it as sundry assets. Now in this case, to call it as sundry assets is easier. Why? Because there was no change in terms of the agreed values. Yeah, so that's why if you call sundry assets of Y Limited, that will make sense. But if the assets have been acquired at agreed values, which is different from the book values, then it is always advisable to put down each and every asset separately. Okay. Then it will say sundry liabilities of Y Limited. Similarly, all the liabilities will be picked up. Okay. And if you remember, it's a amalgamation in the nature of merger that we are looking at. Okay. It's the amalgamation in the nature of merger. So in the nature of merger, we follow pooling of interest method. Remember, we follow pooling of interest method. Okay. Sorry, I have a question in between. So Rashmi is saying, sir, my study material is showing only illustration 2. Okay, so there are two options available. So you can always feel free to look at this question as well as the solution, which I have been discussing with you. Otherwise, you can just always go to the ICAI portal, this BOS knowledge portal. Okay, so the study material modules are available over there. So you can just go download them. It's so easy. Don't worry about it. Huh? Okay, clear on this? Yeah, so everyone, hoping you are clear on this. Yeah. Preeti is asking about second or third. See, I think you'll have to get on to that particular chapter. Huh? So this chapter on amalgamation. Okay. This chapter on amalgamation you'll have to pick up. I think it's chapter 13, I guess. Okay. Clear? Now, because this was pooling of interest method, so that's why in case of pooling of interest method, any statutory reserve will carry its identity, even though it's specified in the question. Even though it's specified in the question that the statutory reserves will have to be maintained. Okay, so if you look at this part of the question which says statutory reserves will have to be maintained, but in case of pooling of interest method, anyways, this identity will have to be used. Rashmi has a question. Rashmi is saying in nature of purchase method, why we are using pooling of interest method? No, I think you are getting confused. We are first of all solving it as, or you can say by considering it as in the nature of merger. Okay, so question is saying solve it using both the methods. So what is the first step we have taken? By calling it as amalgamation in the nature of merger, wherein which method do we apply? Can you tell me? In case of merger, which method do we apply? I think Preeti has clarified on this. It's module 3 of advanced accounting, just for your reference. Can you tell me in the nature of merger, which method do we apply? Rashmi has answered this. It's pooling of interest method. Okay, so same thing we are also doing here. Now clear on this, Rashmi? Yeah, I think Unni Krishnan has also answered the same thing. Kiran has also answered the same thing. Shivanna has a query around this purchase method. See, as of now, I would request that please stick to this merger method, pooling of interest method. When we will move on to purchase method. Okay, so that anyways we have to solve today. Okay, because the question requires both. At that time, we'll talk about purchase method. If I talk about purchase method now, you will only get confused. Okay, so please don't confuse yourself. Just simply focus on the point that you are doing. And in the exam, you should follow the same approach. When you are following a particular method, just think about it, complete it, and then move on to the next part and then think about the next part. Otherwise, you will just end up mixing some of the things. Okay. So now, in case of merger method, what do? Statutory reserves will carry their identity. So now, which all statutory reserves do we have? We have two: export profit reserve, investment allowance reserve. Now, you may be thinking, sir, how do we identify statutory reserves? So now it's very simple. Can you call general reserve as statutory reserve? No. Can you call P&L balance as statutory reserve? Again, no. Okay. So these two are special reserves. As you can see, it's so easy to find out. Okay. These are not the general reserves or the retained earnings. Okay. Yeah. Then I think Sangeetvani is asking, sir, how did we arrive at 8,50,000? So I'm not sure what 8,50,000 is. Are you talking about sundry liabilities? Sure. So let's get on to the sundry liabilities. Huh? So now in terms of the liabilities, if you look at, one is debentures, correct? Sangeetvani, yeah. One is debentures. What amount is that? 3.5. Yeah, 3.5. And what other liabilities do we have? What other liabilities do we have? Let's get on to the balance sheet. So in the balance sheet, we have got 3.5 as the borrowing, 3.5 as the borrowing, and 3.5 as trade payable, other current liability 1.5. So if you take the total of these three, what does it become? If you take the total of these three, what does it become? Tell me. Okay. Yeah. Clear on this? Okay. Yeah. All right. So now in terms of P&L balance, so that reserve will come as it is. Yeah, because that is also a kind of general reserve. And in this case, after the complete settlement means after putting down all the reserves, the net impact which remains, where will you take it? Where will you take it? In case of merger method, it will go to general reserve. Okay, so this is going to be the balancing figure. This is going to be the balancing figure. Now you may be thinking that in this illustration, even though we have moved this credit balance of profit and loss, we have not moved general reserve balance. So if you want, you can always do that. So let's suppose if you credit general reserve by the amount which is there. Okay, so if you go to the question and if you credit the general reserve by this amount. So now what was the amount of general reserve? Say 2.5. Okay, profit and loss credit balance was 5. So now if you go to that, if you put down this 2.5 over here, so then what will happen? This balancing figure will only increase. So which doesn't look appropriate. So that's why you should leave general reserve at the end so that any impact, whether positive or negative, can be taken to general reserve. And in this question, please remember, any differential has not been taken to goodwill or capital reserve. Can you see that or not? Yeah. So see, there is a purpose why we have been solving this particular question. That is to explain some of these adjustments only. Otherwise, we have already looked at purchase method in the previous question also. Yes or no? Yeah. Clear on this, everyone? Any questions so far? Any questions so far? Everyone? Rashmi is asking, sir, but negative, if the balance is negative, then do we credit? No. So, see, when it will be a credit balance, yeah, and if you debit it, then the net amount will remain in the general reserves. To say that general reserve balance will become negative will not happen. Okay. So in the question, you will not find that happening. If by chance that happens, then that will also not be a problem. Why? Because you can always say that it's a kind of your reserves, because P&L balance can always be negative. And P&L, general reserve, retained earnings, these are all what? These are all kind of free reserves. So if by chance that becomes negative, you can always make it negative. There's absolutely no problem in doing that. Yeah. Unikrishnan is saying general reserve also can be transferred. Yes, we discussed. Okay, so if you move general reserve over here, what will happen? This balancing figure will go up. So at one place you are crediting general reserve by 2.5 and debiting by additional 2.5. Doesn't make sense. So that's why you should just show it as net amount in terms of the balancing figure. Okay, clear? Now moving further. Now what will happen? Now the liabilities of Y Limited will be settled. Now the liabilities of Y Limited, sorry, now the liabilities of X Limited will be settled in the way that the liquidators will be paid off by, but there are two modes: by issuing equity share capital, which is at par, so there is no security premium; preference share capital, 18,70,000. Okay, and in respect of debentures which were there, so if you look at the amount of debentures, the amount of debentures was 3.5 lakhs. Okay, so these were 13% debentures, means these debentures carried a coupon of 13%. And what was the settlement? That to these debentures which carry a coupon of 13%, debentures of X will be issued. Debentures of X will be issued means their amount will remain as it is. The only thing is that now the debenture holders of Y Limited will be gone, in a way that those debenture holders, now instead of holding debentures of Y, they will be holding the debentures of X. Okay, yeah. So what does it say? Debentures of Y will be debited and this will be debentures of X Limited. Yeah. So this is how this entire settlement has been done by X Limited. And after doing the settlement, what do we need to do? Very simple. Just place all of these amounts in the balance sheet. Just place all of these amounts in the balance sheet. Okay. So then I think Preeti has a query. So let me just go to this query of Preeti. Just give me a minute. Preeti has a query. So let me just look at this query of Preeti. Preeti is saying, sir, these preference shares have been issued at a premium of 10%. No. So if you'll see, preference shares have been issued. Okay. Preference shares have been issued. Yes. So you're right. They have been issued at a premium. Yeah. Of rupees 100 each. So that premium we have considered. So I think we have considered this amount. Sorry, I didn't realize it. I think we have already considered this amount. So let me just show you this premium amount. So if you go to the consideration that we computed, Preeti, okay. So in this consideration, there were two components. One was 17 lakhs and second component was this additional amount which will be paid to the preference shareholders. Okay, so we have already considered 18,70,000. And now if you go to this accounting entry, okay, so now preference shares have been issued at 18,70,000 only. Okay, yeah. So now as a next step, you just need to place these accounting entries, or you can say the impact of these accounting entries in the balance sheet, which I leave it to you. Okay, so that's why I'm not looking at this balance sheet, that I leave it to you. So now as a next step, what do we need to do? As a next step, we will move on to the entries of X Limited once again. Okay, we'll move on to the entries of X Limited once again. And in this case, we will consider this amalgamation to be in the nature of purchase. Now, please don't get confused. This was the requirement of the question. This was the requirement of the question. Question specified that you will do both purchase method as well as merger method. So at the first place, what did we consider? Merger method, and pass the accounting entries. Now, in the second case, or in this second part, what do we need to consider? It's an amalgamation in the nature of purchase. So that is how you'll have to solve this. Okay, that is how you'll have to solve this. Then I think I got one question in between, and this comes from Rashmi. So Rashmi is saying, sir, additional amount paid means goodwill amount. Yes. So additional amount means additional consideration that we pay over and above assets and liabilities that we acquire. What does it become? Goodwill. And if that amount is on the lower side, means lesser amount is paid as against assets and liabilities which are acquired, that becomes capital reserve. Okay. And now because we are moving on to amalgamation in the nature of purchase, so that's why we should have goodwill or capital reserve. We should have goodwill or capital reserve. So let's try to find out that part only first. Okay. So let's get on to the part as around goodwill or capital reserve. So we can get on to those workings. Now in this case, consideration will remain same. Whether it is merger method or purchase method, will the consideration change? No. So consideration is what? 53,70,000. So we don't need to solve this again. So we can use the same working note. Fine. And the assets which are taken over, we already understand that. How? So we have already looked at these accounting entries. So sundry assets were taken over 66 lakhs. Liabilities were taken over 8.5 lakhs. So net amount of assets which have been taken over is what? 57 lakh 50,000. Okay. Now I think we will have this situation wherein we will either get goodwill or capital reserve. Okay. Sangeetvani is asking, sir, how do we compute equity share capital? You don't need to compute it. You just need to look at the requirement of the question. I think Sangeetvani is asking, sir, how did we compute this 35 lakhs? I think you missed out on this point. So if you go to the question, it says 3,50,000 equity shares have been issued at rupees 10. Sangeetvani, if you go to the question, it says 3,50,000 at rupees 10. At rupees 10. So what does it become? 35 lakh. And in this case, all the numbers which we are looking at are in thousands. Got it? It's 35 lakh. Sangeetvani, clear on this? Yeah. Kiran is saying, sir, this is not understood. Debenture adjustment and statutory reserve adjustment in the books of X Limited. Please explain once more. Yes, we'll do that. Don't worry. See, in this question, by chance, most of the things that we are doing, we'll have to repeat. We'll have to repeat. Can you see this or not? So automatically, your doubt will go away. Don't worry. Yeah, Sangeetvani is clear. Preeti is asking, sir, in merger, entry number 2, goodwill or capital reserve. In purchase, entry number 2, general reserve. No, I think it's other way around. I think you have mixed up. So in case of merger, it will be general reserve. And in case of purchase, it will be goodwill or capital reserve. So now let's come back to this point. Let's come back to this point. Now in this case, the amount of consideration is lower or higher? Tell me. In this case, the amount of consideration is lower. In this case, the amount of consideration, what do you think? Is this lower or higher than the amount of assets and liabilities acquired? Tell me, over to you. What do you think? Is this higher or lower? Over to you, quickly, everyone. Is this higher or lower? Pratima is saying it's lower. So if in case it's lower, Preeti is saying lower, what does it give? Will it result into goodwill or capital reserve? Over to you. So in this example, what would this result into? Sento is saying this will result into capital reserve. Very good. So now in this example, what will happen? This will result into capital reserve. Okay, so now what do you call it as? Now you will have to call it as capital reserve. Yeah, so this becomes capital reserve. Please remember, this capital reserve was not there in merger method. This capital reserve is only there in purchase method. I can see a lot of your queries are coming in around this point. For this, you need to remember goodwill or capital reserve will only arise in case of purchase method, not in merger method. Okay. In case of merger method, where do you take the impact? In case of merger method, where do you take the impact? Over to you quickly. In case of merger method, where do you take this impact? Rashmi Singh, general reserve. Yes, it will go to general reserve. Pratima Pooja have got the same answer. Okay. So now let's get on to the accounting entries once again. Okay. So now it's the purchase method. So in case of purchase method, first accounting entry will be same. Business purchase debit to liquidators of Y Limited. Then second entry will again be same. What is the entry? Sundry assets debit to sundry liability to business purchase. But the only difference is this net impact or the balancing figure over here will become what? Capital reserve. So this will become what? Capital reserve. If you remember, in case of merger method, this balancing figure was taken to general reserve. And you may also have a question that, sir, in case of merger method, all the reserves were picked up. All the reserves were picked up, whether those were statutory or non-statutory. But why are we not picking up all of those statutory reserves or all other reserves? See, in case of purchase method, you will not pick up any reserve. By any reserve, I mean to say any of the free reserve. Mean any non-statutory reserve you will not pick up. Automatically, its impact will go to this balancing figure. So if you don't pick up, in a way, its impact will go to this balancing figure. Okay? Yeah. Plus, the other point is that any statutory reserve, if the question specifies has to be picked up, only then it will be picked up. And we'll discuss as to how it will be picked up in case of purchase method. I'll talk about it. Don't worry. I'll talk about it. Okay. Now, let's move further. As a next step, what will happen? Liquidators will be paid off. Same way. So it's the same accounting entry. As a next step, what will happen? Debenture holders will be settled. Same way, same accounting entry. So can you see any change in the accounting entry? No. Now the question rises that, sir, how do we pick up those statutory reserves? Because there is no accounting entry for those statutory reserves. Yeah. So for this, what we can do is we can just look at the part of the balance sheet, because the balance sheet will have to be prepared in both the cases, in case of merger method and purchase method, which needs to be looked at by you. Why? Because in the balance sheet, you will just pick up the numbers. You will just pick up the numbers. Okay. Numbers from these entries which have been passed. Yeah. Now, in this balance sheet, which has been prepared under purchase method, let me just again tell you, which has been prepared under purchase method. See, in case of merger method, accounting entries were there in respect of all the reserves. So there was no confusion. But I think there is a confusion as around purchase method because you don't see the accounting entry. And I remember there was one query coming in from your side as around this. So now, how do you pick up that? How do you pick up that? So let's go to the balance sheet. Now this balance sheet has been prepared after amalgamation. So this has been prepared after amalgamation. Remember? So now in this balance sheet, impact of all those amalgamation accounting entries will be taken. will be taken. Now, what about those reserves? So there were two reserves, if you remember, which were statutory in nature. Where do you take them? You will have to take them to reserves and surplus. And you don't find the amount or names over here. So for this, what do you need to do? You need to go to the notes to accounts. So in the notes, if you'll see, what will happen? In the notes, if you'll see, what will happen? All the reserves and surpluses which are there in respect of X, those will continue. Those will continue. But I think we need to worry about Y. So that's why what we can do is, let's get on to the balance sheet of X and Y before amalgamation. Then we'll come to this balance sheet once again. Okay, so let me just go to that page. So now this was the balance sheet of X and Y before amalgamation. Okay, so now if you look at statutory reserves of X only, what is the amount? Export profit reserve is 3 lakhs. Investment allowance reserve is nil. Okay, now what X needs to do is, X needs to also pick up this 2 lakh of Y, 1 lakh of Y. So let's understand whether this has been picked up or not. So let's go to the balance sheet which has been prepared after amalgamation. So now we are looking at the balance sheet which has been prepared after amalgamation. So now after amalgamation, balance sheet includes export profit reserve of 5 lakhs. So how do you get 5? 3 plus 2. And investment allowance reserve of 1 lakh. How do you get this? Nil plus 1. So this plus means this 3 is for X, 2 is for Y. Similarly, this nil is for X and this 1 is for Y. Yeah. So let's go back and revisit this balance sheet. So is that the situation? Yes. So it's 3 plus 2, it becomes 5. It's nil plus 1, so it becomes 1. Okay. So let's go to that balance sheet once again. Okay. So this is how statutory reserves have been moved. Now, please remember, we are not required to be bothered about statutory reserves of X. We are only required to be bothered about statutory reserves of which company? Y. Because these are taken over and these may have come to an end. Okay, so what is the amount of that? 2 and 1 lakhs. 2 lakhs of export profit reserve, 1 lakh of investment allowance reserve. Okay, so all in all, it's 3 lakhs. Now, as around this 3 lakhs, what do you need to do? If you remember, one notional reserve debit balance will have to be created. One notional debit balance reserve will have to be created. And what do you call it as? Great. Unni Krishnan has already answered this. Adjustment, amalgamation adjustment reserve. Amalgamation adjustment reserve. Okay. So this is the account which will now come into the picture. And this will always be a debit balance. And what is the amount of this? Corresponding to the statutory reserves which have been picked up. Now, please don't get confused. You may be thinking that's a total of statutory reserve is 5 plus 1. So why are we not debiting amalgamation adjustment by 3? Because for the statutory reserves of X, we don't need to do anything. That will carry as it is. We only need to create this. For Y. Who is Y? Transfer company. Okay. Then I can see some questions. Kiran is asking, but sir, question is saying Y will continue for 2 years. So why X has taken over? No. I think you need to look at the question properly. And in the exam, same thing is required to be done. Question says that the identity of statutory reserves of Y will be continued for 2 years. Y will not continue. Otherwise, why will we do this accounting? So we have spent so much time. Okay. We have spent so much time on this question. Yeah. Why are we doing this? Because Y is taken over. Otherwise, will we do this accounting? Tell me. No. Okay. Rashmi is saying, why is this created? See, it's created so that the impact becomes zero. So at one place, you have a debit balance amounting to 3, and at other place, you have a credit balance amounting to 3. So net its impact is 0. Otherwise, your balance sheet will not match. Okay. Srinivasan is asking, sir, why the amount of amalgamation adjustment reserve is different under two methods? That is because when it comes to purchase method, statutory reserves are not required to be picked up as it is. Picked up as it is means none of the reserves will be picked up. Net impact of all the reserves will either go to goodwill or capital reserve. Okay. But in this case, over and above that net impact, which we have already considered, we have also picked up 2 more reserves amounting to 3 lakhs. So that's why in this case, we have to create this notional account. But when you go to merger method, in case of merger method, all the reserves will be picked up. They will be carried forward as it is. All. So that's why you have these two different treatments. Okay. Unikrishnan is asking, sir, in both the methods, will the total balance of reserve be the same? Yes, ideally, yes. See, if you look at the total balance, it will be same because net there is no impact. But in terms of presentation, there will be a significant impact and you can always compare it. Huh? All right. So now, any questions, any doubts if you have on this, please let me know. Any questions, any doubts if you have on this, please let me know. Then I think Sangeetvani has a question. Yes, let me just go to that question. Okay, Sangeetvani is asking, sir, general reserve of Y Limited need not be picked up? No, that will not be picked up. Why? Because its impact is already taken to either the goodwill or capital reserve. Okay, so you can say its impact will get subsumed over there. Yeah, in that goodwill or capital reserve, it will go and get merged. Fine. Harish is asking, sir, if in this question, in the additional information, transferee company takes over the assets at the values different from book values of Y Limited, then the purchase consideration will be different in both the methods from each other. Yes. Now, in terms of purchase consideration, I think you are looking at those accounting entries wherein the impact is going to general reserve or goodwill or capital reserve. So if you are talking about those two, then of course it's going to be different. But when it comes to the consideration which is paid by X to Y, should that change? No, that should not change. In fact, question will not ask you for such type of information or will not provide you such type of information which you have just specified. Why? Because if let's suppose assets and liabilities will be taken over at some different values, different from book values. So tell me one thing, in such a case, will it remain an amalgamation in the nature of merger? Do you think so? Tell me, will it remain an amalgamation in the nature of merger? What are your thoughts? Everyone, please tell me. Please tell me. Will it remain amalgamation in the nature of merger? Tell me. Preeti is saying no. Yes, that's correct. Yeah. So that's why question will also be providing you appropriate information generally. And if by chance it's not giving that, please follow that. Okay. Yeah. All right. So then I think this next question comes from Srinivasan. He's asking, sir, how we arrived at 670 as amalgamation adjustment reserve under merger method. So when you will close the balance sheet, okay, in both the cases, what you will find is in both the cases, you'll have to consider the impact. You'll have to consider the impact. So net amount will go over there. So once you prepare the balance sheet, you will get the answer. Okay. Yeah. I leave it to you. If you still have any doubts, we can definitely discuss that. Okay. So then any more questions, any more doubts, if you have, please let me know. And also please quickly confirm, should we take a break now or should we continue? Tell me, everyone, please, should we take a break or should we continue? So now we are going to start with AS21, that is about consolidation. So should we take a break? Preeti is saying no break. What about others? Pooja is saying no break. What about others? Yes, please confirm quickly. Kiran is saying no need for break, sir. Very good. So I think we should continue. Yeah. Great. Rashmi, Sunil, they are saying no need for break. Pratima is saying please continue, no break. Harish is saying let's continue, and same is the response from Sangeet Vani. Okay, great. So now what we are going to do is we are going to pick up a very important topic, which is about consolidated financial statements. Okay. Now, in respect of consolidated financial statements, or very popularly we call it as consolidation, there are three accounting standards that we will be dealing with. AS21, which deals with consolidated financial statements in respect of subsidiaries. And then we'll also be looking at AS23, which deals with associates, AS27, which deals with joint ventures, jointly controlled entities, okay, which is more about joint control. So currently, we'll be starting off with the subsidiaries. I would say a very important topic you would be knowing about it, for AS21 in particular. Yeah, it carries significant importance. Why? Because generally you get to see questions from this topic. Okay, and generally there is a thought that it's a lengthy topic, it's typical. Okay, so but we'll just try to sort of discuss each and every aspect as around this topic, and we'll also be looking at questions as around various concepts that we are going to cover. But my request to everyone will be to make sure that everything that we discuss, you keep revising that. Okay, because all of these things that we have been discussing are important, but there are some of the things which are of more importance. For example, amalgamation and consolidation. So these are important areas for you to look at. So now AS21 talks about consolidated financial statements, wherein it talks about two types of companies, holding company and the subsidiary company. So let us quickly try to understand this concept of the holding company, of the subsidiary company. And then what we will do is we will just look at some of the accounting requirements also. I think Preeti has a question. Preeti is saying, sir, एक बार TYK9 question और TYK9 question में help कर दीजिए. So what do you mean by TYK? Are you referring to any particular question? Yeah, sure. We can discuss that. Don't worry. So maybe towards the end of the session, we'll discuss these queries once again. Don't worry. Yeah. Then I think Unni Krishnan has a question. He's saying, can I do the balance sheet without notes in the last example that we have discussed? No. Please don't do that. please don't avoid notes. See, if you only prepare the balance sheet, or if in case you only prepare the statement of P&L, and the notes to accounts you don't give, you'll lose marks. Please avoid doing that. Huh? Please be careful. Okay, so I think Preeti was referring to test your knowledge, and that is what Unni Krishnan is specifying. Sure, no worries. So we'll look at it. Okay. So I'll just make a note of it and we'll see as to maybe today or maybe in the next session we can talk about it, Preeti. Don't worry. Yeah? I'll make a note of your question. All right. So now let's talk about some of the concepts in relation to consolidation. So say there is a company H Limited. Okay. And there is a company S Limited. Yeah. If let's suppose H Limited acquires S Limited, H Limited acquires S Limited. Please listen to my question carefully. Yeah? You'll have to answer this. And after acquisition, S Limited will lose its legal stature. Means S Limited as an entity will not remain anymore. It will go and get merged with H Limited. So can you tell me which accounting standard will apply to that situation? Over to you. Which accounting standard will apply in that case? Over to you. Tell me. Kiran is saying AS 21. Pooja is saying AS 21. What about others? Tell me quickly. Pratima is saying AS 21. See, now this is very, very important. You should avoid the mistake which you have just made now. See, in the exam, see, whenever you go and read the study material or the book, what will happen? Every time when you will go to that particular chapter, okay, every time Santo has answered this. Very nice, huh, Santo? So now I'll just tell you the problem and on which you need to work on. So let's suppose if you start reading AS 21. So what will happen? You will open your book, you will go to this particular chapter, and in this chapter, all the questions that you will be solving, what will happen? By default, you will apply AS 21 to that. Why? Because you understand you are in this chapter. So that's why all the questions will be for AS 21 only. Yes or no? Yeah. Now you can say that's the disadvantage. Why? Because let's suppose if you go to the exam. Now let's suppose if you go and sit in the exam. So you have this examination paper wherein you are, let's suppose, given 3 questions. So in these 3 questions, will you be told that on this particular question, you need to apply this particular accounting standard? Some of the questions may specify, but will each and every question will specify? May or may not. So that's why you need to be very clear in terms of the relevant standard, the relevant area which needs to be applied. Now, that is the problem which you have just faced. Why? Because I started with AS 21. I told you let's begin with AS 21. And I discussed a particular situation wherein S Limited is getting acquired by H Limited and S Limited is coming to an end. Now, if you go back and revisit our discussion on which we have spent so much time, what did we discuss? That a moment an entity is acquired and that comes to an end. And that entity comes to an end. So what do you call it as? You call it as amalgamation. Yes or no? On amalgamation, can you apply AS 21? Tell me. No. Sayanto answered this. Okay. And I think Shivanna, Preeti, they answered this correctly. Sangeetvani also answered this. Yeah. So every time you need to be very, very careful. Just don't think that if we are in this topic, so by default, you'll have to say AS 21, AS 21. That means you are not understanding. You are just, you know, putting across your answer without understanding. So it's very, very important. Huh? So please make a note of this point. Huh? Very, very important. So now let me just discuss one more situation with you. And again, you need to answer this. So let's suppose there's a company H Limited. There's a company H Limited. It acquires P Limited. It acquires P Limited. And after the acquisition, at H and P, both the companies continue. After the acquisition of P by H, both the companies can continue. So in this case, can AS14 apply? In this case, can AS14 apply? Tell me. Can AS14 apply? Kiran, Preeti, Pooja, they are saying no. No. Very good. So now, this was the situation. If you remember, in AS14 we discussed, which we called as acquisition. So this was the situation which was, you can say, termed as acquisition. Okay. And on which we discussed AS14 doesn't apply. And we moved it out of the scope of AS14. I remember, I think Harish had a question on this in the last session. That, sir, what will happen if P Limited continues? It's acquired by H Limited. So let's suppose H Limited acquires 100% shares of P Limited, but P Limited continues. So what do we do? AS14 doesn't apply. So where do we go? Now, for this type of situation, what will happen? AS21 will come into the picture. AS21 will come and AS21 will be applied on this. Okay. And in this case, when P will be acquired by H, so what do you call it as? H gets control over P Limited. H gets control over P Limited. In this case, now again, this is important. In this case, P will be called as a subsidiary company. P will be called as a subsidiary company. And H Limited, in this case, will be called as holding company or parent company. Understood? Yeah. Any questions on this? So this is the base. Yeah. It's all about basic understanding of subsidiary and the holding company. Any questions, any doubts? If you have, please feel free. Sangeetvani is saying holding company and subsidiary company. Both are continuing. So AS21, yes. Okay. So AS21 will apply. Yes. Absolutely correct. Yeah. AS21 will apply here. This is absolutely correct. Yeah. Any questions on this? Kiran is clear. Srinivasan is asking, sir, subsidiary company or wholly owned company? I'll come to that point. Okay. As of now, you should call P as subsidiary, H as holding or parent company. Fine. Yeah. All right. So now, as regards this subsidiary, holding will have one additional problem. Let's try to understand that additional problem which holding is going to face. See, H Limited, whether it acquires P or not, whether it acquires P or not, tell me one thing, was it required to prepare financial statements? Over to you. See, H Limited, whether it acquires P or not, was it required to prepare financial statements or not? Preeti is saying yes. Rashmi, I'll come to your query. Kiran is saying yes. See, irrespective of whether P was acquired or not, H was always required to prepare its financial statements. Correct? And what did we call those financial statements as? Those financial statements are called as standalone financial statements. Okay? Means financial statements of H Limited will be prepared, which H was always required to be prepared. Okay? Now, if in case H has got a subsidiary, maybe it acquired it in the current year or it was there in the previous years. If H has got a subsidiary, how will it become a subsidiary? If H gets control over P Limited, then in addition to this standalone financial statements, which H will be required to prepare, another set of financial statements will be required to be prepared by H Limited. And what do you call it as? Consolidated financial statements. Okay. So that means the moment H will have a subsidiary, whether it existed in the previous years or H acquired a subsidiary in the current year, at any point of time, what will happen? H will be required to do two things. Standalone financial statements will continue as it is. In consolidated financial statements will also have to be prepared. So this is going to be one addition. Okay. Clear on this? Yeah. Okay. So now let's come back to the queries. Harish is asking, sir, is there any chance to ask question about subsidiary and holding company amalgamate each other in the exam? Yes. What is the problem? What is the problem if that happens? So it may happen, but you should not worry because the concept will remain same. Then I think Srinivasan is asking, sir, in Ind AS also standard is same? No. So Ind AS standard is different. Its requirements are also significantly different. Preeti is asking, sir, after acquisition, consolidated financial statements will be prepared? Yes. Sangeetvani is saying both the set of financial statements will have to be prepared, standalone as well as consolidated. Yes. But you should not worry. In the exam, you may not be asked to prepare both. Otherwise, it will become a very, very lengthy solution. Okay. So the question will either ask for standalone or console. Don't worry about it. Okay. Now, let me just take an example. And with the help of that example, we will now discuss one particular situation wherein one company is acquired. Okay. So say it is 1st June 2024. 1st June 2024. Okay. Now, this is the beginning of the year, 1st April 2024. Now, H Limited was the company. It acquired S Limited. On which date? 1st June 2024. Now, in this case, at the year end, 31st March 2025, H will be required to do two things. One, prepare standalone financial statements of H. Two, prepare consolidated financial statements. Okay. But now, when these consolidated financial statements will be prepared by H. So what will happen? What do you mean by consolidated financial statements? Consolidated financial statements means that starting from this date, in the consolidated financial statements, H will have to consider that H and S are not two entities. H and S are not two entities. It should consider as if these two entities are in a way one single entity. Okay, and we'll discuss as the methodology around it. It should consider as if H and S are not two, but one single entity. And that is what you call as H plus S or group of entities. For this group, which comprises of two or more entities, because there could be many subsidiaries. It's not necessary that there will be only one subsidiary. There could be many subsidiaries. For this group, the financial statements will have to be prepared. And what do you call it as? That is called as consolidated financial statements. And from which date this set of financial statement will be prepared? This will be prepared starting from 1st June. So this consolidation will start not from 1st April 2024. Please remember, consolidation will not start from 1st April 24. No. For this period, consolidation will not be done. When does this consolidation start? Consolidation will only start from the date control is acquired in the subsidiary. Okay, so that means the consolidated financial statements which H Limited will prepare will be for what period? Can you tell me? The CFS which H will prepare will be for what period? Over to you. Kiran is saying 9 months. Please recheck. Kiran, please recheck your answer. For what period? Rashmi is saying June to March. What do you mean by June to March? Tell me, everyone, quickly. 10 months is what Rashmi is saying. Yes. Pratima is saying 1st June to 31st March. Yes. Sayanto, Kiran, they have got same answers. Harish has got the same answer. Understood? Yeah. So this is about the requirement of preparation of consolidated financial statements. Everyone clear on this? Yeah. Any questions, any doubts if you have on this, please let me know. Any questions, any doubts? I think Sangeetvani has answered this, and Thiruvalam one has also answered this. Okay, great. Any questions so far? Any doubts so far? No? All right. So now, consolidated financial statements we have discussed. That on this particular date, 1st June 2024, it will start. There is another very important concept, and which I'll try to use over here. I think Preeti has a question. Before that, let me just look at the query of Preeti. Preeti is saying that if H acquires S and S has another subsidiary S, X. So let's suppose H acquires S and S has got another subsidiary X Limited. Then in this case, H Limited will prepare X Limited financial statements. No. Let's not get confused with that. See, in this case, first of all, because S has got a subsidiary, so S will prepare consolidated financial statements. Okay. Because S has got a subsidiary, so S will also be required to prepare consolidated financial statements. And now for H, there are two subsidiaries. One is direct subsidiary S. Second is indirect subsidiary X, or which you also call as step subsidiary. So when H will prepare consolidated financial statements, it will include both S and X in those console financial statements. Okay? Yeah? Understood? Then I think Kiran has sort of tried to answer this. Great. Okay. So now, so I was just saying that there is another point as around this acquisition which one needs to always consider. And please remember that so far we have not discussed any accounting requirement. Okay, so all of those accounting methodology, etc., all of these things we are going to discuss. As of now, I'm just discussing the concept around this acquisition with you or consolidation with you. Okay, Srinivasan has a query. So let's look at these queries now. He's saying, sir, standalone financial statements will be for 12 months. Yes, that's correct. April to March. And consolidated will be for 10 months. So how will these balances match? So you don't need to match these two balances. See, these are two separate sets. In one set, you are preparing balance sheet P&L for only one company. In another set, you are preparing balance sheet P&L everything for the group. So why do you need to match the balances? Okay, no need to match the balances. Then Thiruvaluvan is asking, sir, if the consolidated financial statements are prepared for 10 months, then what will happen to 2 months financial statements of H Limited? Nothing will happen. So standalone financial statements of H will be prepared in a separate manner. Consolidated financial statements will be prepared in a separate manner. Don't try to mix up these two. You will only confuse yourself. There is absolutely no need to just bring those two together and creating a confusion for ourselves. Let's keep it simple. Okay. Sangeetvani is asking, sir, holding company will include direct and indirect control? Yes. Yes. Okay. But that is something, again, you'll have to analyze. Okay. Yeah. So, any more questions if you have? I think Rashmi had the same query. Yeah. So, I think Rashmi, your query is answered. All right. So, now, any questions? Just a minute. Any questions if you have? Kiran has a question. Kiran is asking, sir, will subsidiary also make standalone financial statements or not? Yes. See, standalone financial statements for H and S will remain as it is. That is not going to get impacted. That requirement is there as it is, unchanged. And for that, you don't need any more technicality. The only additional thing which gets added is what? Preparation of consolidated financial statements. Whose responsibility will that be? That will be the responsibility of H, not S. Who will be required to prepare CFS? H. Okay, clear? Any more questions on this? Everyone clear? Yeah, clear on this? Okay. Great. Santo, Kiran, they are saying yes, clear. Okay, great. So now there is another very important point, and I would need your attention. And if you have any questions on this, please ask me, because with this, our base for accounting requirement is going to begin. And I'll also start moving on to the accounting requirements with this. See, whenever a subsidiary company will be acquired, which in this example is 1st June 2024, consolidation will start. Where will that consolidation start? In the consolidated financial statements, not in standalone financial statements. Standalone financial statements of H and S will remain as it is. unchanged. Consolidation will start in CFS. And for the purposes of this consolidation, at the time of acquisition, means at this point of time, an exercise will have to be carried out. What do you call that exercise as? Computation of goodwill or capital reserve. Now, what do you mean by this? See, this is exactly similar to what we have done under amalgamation. No change. Don't think that we are going to do amalgamation accounting over here. No, we are just simply saying that whenever a subsidiary will be acquired, at the time of acquisition, what will happen? H will get assets of subsidiary. H will also get liabilities of subsidiary, which it will mix up, not in standalone financial statements, but in consolidated financial statements. And for doing that, H will pay purchase consideration to the shareholders of H Limited, similar to what was there in amalgamation. See, in this case, when H will acquire control. So now who becomes the owner of this subsidiary? Who becomes the owner of this subsidiary? H. But earlier that, owners of this subsidiary were different. Now, if H has to become the owner of this subsidiary, H will be required to pay some consideration to the previous owners, or you can say to the shareholders. What do you call it as? That is called as purchase consideration. That is exactly similar to what you have done in case of amalgamation. That is exactly similar to what you have done in case of amalgamation. And over here, because the purchase consideration will be given, against which assets and liabilities of subsidiary will be taken over, even though subsidiary as a separate legal entity continues, what will happen? This goodwill or capital reserve will have to be worked out. This will have to be computed. On which date? On the date of acquisition. So this will be required to be done on the date of acquisition. Clear? Yeah. So this will be required on the date of acquisition. Okay. So now I think I have a couple of queries coming in. I think Vijay's query is around the administrative. Srinivasan is asking, sir, can we say that consolidation is somewhat similar to amalgamation by purchase method? You can say yes, somewhat similar, but please don't copy paste now. Okay. Otherwise, you will create a confusion for yourself. Okay. Clear? Now, in our examples that we have discussed so far, parent company was acquiring subsidiary company. Okay. And through this acquisition, parent company was getting control over subsidiary company. And in our examples so far, we discussed that when parent acquires, so the parent acquires 100% shares of subsidiary. See, when the 100% shares of subsidiary are acquired, then who will become the owner of subsidiary? Tell me. Then who will become the owner of subsidiary? Kiran is saying H. Rashmi is saying H. Yes. So will there be any other owner of subsidiary in such a case? Tell me. Will there be any other owner of subsidiary in such a case? Over to you. Will Will there be any other owner of subsidiary in such a case? Rashmi is saying no. So that's why in this case, you will say that this subsidiary is wholly owned. This subsidiary is wholly owned. You can say you will call it as wholly owned subsidiary. Wholly owned subsidiary. This is what you call as wholly owned subsidiary. Clear? Clear on this? Now, another type of situation may arise. Let's try to understand that. Say there is H1 Limited and there is S1 Limited. Yeah? Or let me just change this. So there is H1 Limited and there is S1 Limited. Okay, now before S1 is acquired by H1, yeah, there was an owner of S Limited. Who was that? M Limited. So M Limited owned 100% shares of S1 Limited. M Limited owned 100% shares of S1 Limited. Now, subsequently, what happened? H1 acquired 80% shares of S1 Limited. H1 acquired 80% shares of S1 Limited. Now, if H1 will acquire 80% shares of S1 Limited, what will happen to the shareholding of M Limited? Can you tell me? What will happen to the shareholding of M Limited? Over to you. What will happen to the shareholding of M Limited? Over to you. Tell me. What will happen to the shareholding of M Limited? Pratima is saying it will reduce to 20%. Kiran is also saying it will reduce to 20%. So we can write that. So if you are saying this will reduce, so that means now it will become 20%. Okay. And Harish is also saying it will become 20%. So tell me in this case, after the acquisition, can we say that S1 Limited is wholly owned by H1? What do you think? Can you say that S1 is wholly owned by H1? Preeti, Pooja, they are saying no. Yeah. So now this type of entity has got two owners. This type of entity has got two owners. And that's why it's not wholly owned. It's not a wholly owned. Is it a subsidiary? Yes. For H1, it is a subsidiary. Why? Because H1 has got control over this. We don't know about M, but M doesn't have control over this. Okay, M doesn't have control over this. Now, in this case, who holds the majority shares? Who holds the majority shares? In this case, who holds the majority shares of S1? Kiran is saying H Limited. So that's why H1 will be called as one having majority interest. Or you can say majority interest holder. H1 will be called as majority interest holder. And this M doesn't hold majority interest. M is not holding a majority interest. M has got minor interest. So that's why M will be called as minority interest or minority interest holder. Okay. Yeah. So if in case the shares are not acquired 100%, then what is going to happen? minority interest will also come into the picture. And please remember, what do you mean by minority interest? Minority interest means another set of owners of this subsidiary, another set of owners of this subsidiary, but those owners do not own majority shares. They hold minority shares. That's why they are called as minority interest, minority shareholders. Okay, minority interest. Now, as regards minority interest, they hold the ownership. They have got the ownership of S Limited. Okay, so that's why if you look at net assets, if you look at net assets of S Limited, can you tell me to whom these net assets would belong to? To whom these net assets would belong? If let's suppose S1 Limited has got net assets worth of 100 crore. So can you tell me these net assets of S1 Limited will belong to whom? Over to you. So they would belong to whom? Over to you. Preeti is saying they belong to both H1 and M on a proportionate basis. Very good. So net assets of S1 belong to its owners on a proportionate basis. 80% of net assets belong to H1 and 20% of net assets belong to M Limited. Okay, clear on this? Yeah. See, these are all very, very important concepts. And we will be using all of these concepts when we'll move on to our accounting requirements. So that's why all of these are, you can say, we are setting up our base in terms of moving ahead with the accounting requirement. So if you have any questions, any doubts, please let me know. Any questions, any doubts, if you have so far, please let me know. Over to you. Are you clear in terms of our discussion that we have had so far? Any questions, any doubts if you have? Preeti is clear on this. What about others? Pooja is saying no doubt. Very good. Yeah, so I think Sangeetvani, Harish, they have been answering this. Preeti is answering this. Great. Thiruvalavan is also answering this. Okay, great. So now, considering the fact that at the time of acquisition, acquisition may or may not be 100%. So I'm just going back to this situation. Okay, on 1st June, S Limited was acquired by H Limited, because of which consolidation will arise. Okay, so now on this date, 1st June 2024, some of the things which become important, let's try to list down those points. Okay, let's try to list down those points. Just give me a minute. What are those important things? So one that at the time of acquisition, one important calculation will be that of goodwill or capital reserve. Okay, on 1st June, one will be goodwill or capital reserve, that will have to be worked out. Second, minority interest, amount of minority interest will have to be computed. Amount of minority interest will have to be computed. Okay, yeah. So both these things become important. Both these things become important. Okay, clear on this? Yeah. So every time there is an acquisition through which control is acquired, so what will happen? Consolidation requirement will start, and on the date of acquisition, Goodwill or capital reserve will have to be worked out. And if in case there is a minority interest, that will also be required to be worked out. Okay. Yeah. So any questions so far? Any doubts if you have so far? Please let me know. Any questions, any doubts if you have so far? Tell me, any questions, any doubts if you have so far? No? No? Sure? All right. So now let's get back to our same discussion. Okay, I think Srinivasan has a question. Srinivasan is asking, sir, in case of wholly owned subsidiary, whether the present company needs to provide separate standalone financial statements of subsidiary and parent? Yes. See, I have been repeating this, okay? And please remember this point. Please don't forget that preparation of standalone financial statements has got nothing to do with the preparation of consolidated financial statements. Means that requirement will remain as it is. Okay? Yeah. Sangeetwani is saying, sir, what if there are two owners, both are having 50%? So that's a separate situation altogether. We'll talk about it. That if there are two owners, both holding 50%, then what do we do? As of now, in our examples under AS 21, we will always have a situation wherein one investor, one owner will be there who has got control. And generally, under Indian GAAP, how does this control arise? When more than 50% shares are acquired. Okay, so that's the principle you need to remember. When more than 50% shares are acquired. Okay. Now, here again, when S Limited is acquired, then H may agree, at times H may agree that the values of assets and liabilities of S Limited will be kept at book value, or H Limited may agree to carry those assets and liabilities at amounts which are other than book values. Okay, so this is an agreement which may be there between these two parties. Now, depending on this requirement, what will happen? Can you tell me the impact which is going to arise? Now, please don't think that now merger method or purchase method will come into the picture. No, we don't have separate methods. Only one method is there. So just tell me one thing, that if in case assets and liabilities of S Limited are acquired at book value as against agreed value, what is going to be the impact? What is going to be the impact? Over to you. What is going to be the impact? Yes, tell me quickly. What is going to be the impact if those are acquired at book values, if those are acquired at other than book values? So what is going to be the impact? Over to you. Tell me. What will be the impact? Yes, tell me quickly. Tell me quickly. What is going to be the impact? Waiting for a response. Quickly, huh? Harish is saying impact will be there on the net assets. Very good. Now, because of this impact on the net assets, what is going to happen? Preeti has answered this. Very good. Goodwill or capital reserve, which will be computed, that will get changed. Yes or no? The impact eventually will go to what? Will go to this computation of goodwill or capital reserve. Okay. So that will go to this goodwill or capital reserve. Understood? Yeah. So now what we will do is we'll just pick up some questions, some examples wherein we will be discussing as around this takeover, and wherein this takeover may be happening at book values or other than book values. So let's try to look at those examples. So just give me a minute. I'll just open that and we'll just try to consider its impact. All right, so let's look at this example. H Limited acquires 70% of equity shares of S. 70% of equity shares of S on 1st January 2000X1. On that date, paid up share capital of S was 10,000 equity shares of rupees 10 each. Accumulated reserve balance was 1 lakh. H Limited paid 1,60,000 to acquire 70% of the interest in S Limited. Assets of S Limited. Now this is important. Assets of S Limited were revalued on 1st January X1. And a revaluation loss of 20,000 was ascertained. What do you mean by they were revalued? Means it was decided that when the assets of S Limited will be taken over, they will not be taken over at book value. Some of the assets will be revalued. And that revaluation resulted in a loss of 20,000. So now in this case, for the purposes of computation of goodwill or capital reserve, how do you compute the amount of net assets? Okay. Why is that important? Because if let's suppose we go to solve this goodwill or capital reserve, so what do? We'll say purchase consideration less net assets acquired. Less net assets acquired. Okay. And the differential will either become goodwill or capital reserve. Now purchase consideration is known to us. What is the amount of purchase consideration? 1,60,000. But net assets amount will have to be worked out. So how do we work out net assets amount? How do we work out that net assets amount? Yeah. So net assets which have been taken over are on a proportionate basis. So what do? Equity and reserves, they are nothing but the net assets. So equity share capital was what? 1 lakh. So 70%. Accumulated reserve was what? 1 lakh. So 70%. And this revaluation loss, this will impact the net assets. This will have an impact on the net assets and this will reduce the net assets. So a proportionate impact of this will also be taken over here. So therefore, what is the amount of net assets which have been taken over? 1,26,000. 1,26,000. So in this case, what do you get? Goodwill or capital reserve? Tell me, over to you. In this case, what do you get? Goodwill or capital reserve? Over to you. In this case, what do you get? Goodwill or capital reserve? Pratima is saying goodwill. Rashmi is saying capital reserve. Very good. What about others? Kiran is saying goodwill. Yeah. Okay. What about others? Goodwill or capital reserve? Goodwill or capital reserve? Tell me. Will it be goodwill or capital reserve? It will be goodwill. Why? Because the excess amount is paid. If this amount is paid in excess, then what does it become? It becomes goodwill. Okay, so this amount that you compute, this will be termed as goodwill. Okay, clear on this? Yeah. Any questions, any doubts? If you have, please keep asking questions. Huh? All right, so let's look at one more example. A Limited acquired 70% shares in B On that date, B had a paid up capital of 1 lakh and accumulated reserves of 1 lakh. Assets and liabilities were revalued and it resulted in a revaluation profit. So now, as against a loss, what do you have? Revaluation profit. And the purchase consideration was 1,30,000. Purchase consideration was 1,30,000. So now against this purchase consideration, what is the amount of net assets? What is the amount of net assets? 70% of capital, 70% of reserves, and 70% of this revaluation gain. So what does it become? 1,54,000. So now this amount which has been paid is lower than the amount of net assets acquired. So in this case, what do you get? Tell me, in this case, what do you get? Goodwill or capital reserve? Over to you. Sayanto, Pooja, they are saying capital reserve. Pratima is saying capital reserve. Yeah? Pratima is saying it's capital reserve. Okay? Yeah? So in this case, this will become capital reserve. All right. So let's quickly look at one more example. Okay. Now, H Limited acquired 16,000 equity shares of rupees 10 each in S Limited on 1st October for 3,06,800. P&L of S Limited showed a balance of 10,000 on 1st April. P&L balance means it was the reserve. It was the reserve. Okay. It was the reserve. Plant and machinery of S Limited, which stood in the books at 1,50,000 on that date, was considered worth at 1,80,000. Okay. Means this was revalued. This was revalued. Then we are given information of two companies. Then we are given information of two companies. So you can just start solving the question also. Share capital is there, general reserve is there, P&L balance is there, land and building, plant and machinery, investments, current assets. Okay. Percentage of shareholding is given. What is that? 80%. How do you compute it? Yeah. So I think we are also given the number of shares. It will be 20,000, out of which 16,000 is acquired. So what does it become? 80%. So now in this case, over and above this holding company or the majority shareholder, what do we have? Minority shareholder as well. What do we have? Minority shareholder as well. And what is the interest of minority shareholder in this case? Minority shareholder is 20% in this case. Okay, clear? Yeah. So now, in this case, what is it that we are required to do? Now, once again, we'll just be considering the impact of all of these items. So at first place, in the question, we will be required to make this adjustment on 1st October. Why? Because this company got acquired on 1st October X1. Yeah. So can you just quickly compute the impact on 1st October and let me know as to what impact will be there on 1st October. So this is 1st April 2000 X1. Yes, quickly. I'll just wait for you to respond. Yes, quickly. on 1st April X1. Okay, Kiran is saying impact for 6 months will have to be considered. Yes. So now in this case, so if you look at this information, okay, this balance sheet is available to us as at 31st March X2. Okay. But the acquisition has taken place on which date? 1st October X1. So can you tell me on which date goodwill or capital reserve will be computed? On this date, on this date, or on this date? Tell me. There are 3 dates. On which date goodwill or capital reserve will have to be worked out? Tell me quickly. Kiran is saying on 1st of October. On 1st of October, yes. So that's why we will have to compute the net assets on 1st of October. Net assets of what? Of S Limited. So that's why this plant and machinery which has got revalued, okay, this was appearing in the books at 1,50,000 on X1. We'll have to find out as to whether this would have got depreciated or not. What would have been the impact of depreciation on this? And what is the revaluation gain or loss? So as of now, we are not able to make out. So that's why what do? We will compute the impact of depreciation on this. Okay. So now if you look at the balance sheet, so in the balance sheet, this plant and machinery is appearing at 1,35,000. So its opening balance was 1,50,000, closing balance is 1,35,000. So 15,000 is amount of depreciation which has been charged. So approximately 10% is the amount, is the rate of depreciation. Okay. Now, this rate is important. Why? We'll get into those calculations and we'll try to understand as to why this rate is important. In this example and in all of these situations, please remember that these balance sheets, okay, which you can see for H and S, what are these? These are standalone. These are standalone financial statements or balance sheets of H and S. So if at the time of acquisition, any revaluation will happen, remeasurement will happen, whether it results in a gain or loss, does it go to the standalone financial statements? No. It will not go to standalone financial statements. Its impact will only be considered where? Consolidated financial statements. So that's why when we look at plant and machinery, its opening balance was 1,50,000 and its closing balance is 135. What does it mean? It has gone down by depreciation. You should not think, sir, why are we not considering this 180? Because its impact would have flown over here. No, its impact would not have gone to the standalone financial statements. Okay. So now let's get on to the solution. So depreciation rate at first place we need to work out. So now book value of plant and machinery on 1st October is required. What is it? Charge depreciation for 6 months on 150. So it is 142,500. Now, why is that required? So that we can compute the revaluation profit on the date of acquisition. So what is the revaluation profit? 180 minus 142,500. So revaluation profit is 37,500. Now this profit on a proportionate basis belongs to whom? H Limited. So 80% belongs to H. 80% belongs to H. Okay. Now, if we have to compute the share of H in this revaluation profit, what is that? It's 80%. And in this revaluation profit, 20% belongs to whom? Minority. So when the minority interest will be computed in our questions as we'll move further, what will you find? That you will have to allocate this amount to both majority shareholders as well as minority shareholders. Something which we have done in this example. Okay, something which we have done in this example. Okay, and then of course, as we move further, so the depreciation will have to be worked out. Okay, So the depreciation will have to be worked out. Now, in the standalone financial statements, the amount of depreciation was 15,000 for the year. In the standalone financial statements, amount of depreciation was 15,000 for the year. Okay. But starting from 1st October, plant and machinery should have been considered at 1,80,000 for the purposes of CFS. For the purposes of CFS. So that's why in the case of CFS, what should we do? In the case of CFS, we should charge depreciation at the rate 10% on 1,50,000 for first 6 months and at the rate 10% on 1,80,000 for next 6 months. Yes or no? And if we do that, will the amount of depreciation increase? The answer is yes. That will increase. What amount it will increase? It will increase by 1,500. So this computation is done for you. So this is the amount by which depreciation will increase. So if the depreciation will increase, so it will hit the retained earning. It will impact the profits. It will impact the reserves. It will impact the profits. It will impact the reserves. So where do you take that impact? Where do you take that impact? So that impact will again be allocated to two parties. Which are those? H Limited, 80%. Minority interest, 20%. Okay. Yeah. So this example was just to explain you that if in case there is a minority interest, yeah, so a couple of things are going to arise and all of those things will have to be allocated amongst both majority and minority. So that is how we'll have to just keep coming to those amounts at every point of time. All right. So we'll just move further. So we are not yet done, but I think in the meantime, I have a question from Srinivasan. So let me just look at that question of Srinivasan. Okay, he's asking, sir, initially S Limited provided 15,000 as depreciation. Then why again for 6 months it needs to be calculated? Because when S provided depreciation, S was preparing standalone financial statements. In the standalone financial statements, S will not consider any impact of revaluation. Why? Because we discussed that standalone financial statements will not get impacted because of any of these requirements of consolidation. Okay. So where will you consider this depreciation impact? On the revalued amount. On this revaluation, okay, which has got increased, additional depreciation will arise. Yes or no? Because if you increase the value of the asset, amount of depreciation will increase. Where will you take it? You will have to take it to CFS. For that purposes, you'll have to do this. Okay. Clear on this? Any more questions? Any more doubts if you have? Yes, quickly. Any more questions? Any more doubts if you have? Ajit, I think you can also open this channel, though it's already open. Students can ask questions, but you may just revisit if it's not open. Any questions in the meantime if you have any doubts? No? All right. So I'll just move further. Okay.
Yes, sir.
Yes, you have a question? Yes, Rashmi.
Yes, sir, I have a question. If 100% M Limited is acquire S Limited, then how can acquire 80% of S Limited? If one company is already acquired 100% control, then 80% control is acquired, then means M Limited, na? S Limited के पास have to nothing.
Understood. So I think you are discussing about that example that we had taken. Okay. I think you are talking about this one, this example. Is it?
Yes, sir.
Okay. So now in this example, you are right that for S Limited, who was the owner? M Limited earlier. Okay. So who was the
Yes, sir.
owner? It was M Limited. So let's say on 1st June. Now in our example, we have done this acquisition on 1st June. Correct, Rashmi? Now before 1st
Yes, sir.
June, who was the owner? M Limited. But starting from 1st June, who will become the owner? Can you tell me? H Limited.
Yes, sir.
Means who has got control starting from 1st June? It is H Limited. And after 1st June, what will happen to this M Limited? This M Limited will become minority interest. Okay, so that is the situation that we discussed. Or let me just give you one more example. Okay, just to keep it very, very simple. Preeti has a question around pre and post acquisition profits. See, there are a lot of points. We are not yet done, Preeti. And please remember that for consolidation, we have just started. Okay, so we have got more sessions. So we'll continue. Consolidation is a big topic, so it's not going to come to an end. So all of these things will cover. Yeah. So let me just come back to this query. So let's suppose S Limited had various owners. Okay. So let's suppose there were various shareholders. They owned 100% shares of S Limited. See, if a new shareholder will come or a new party will come and will acquire shares of S, say 80% shares are acquired. So obviously before the acquisition, somebody else would have been the shareholder of S Limited or not?
Yes.
Obviously, yeah. So in our example, what did I do? I said that this shareholder was M Limited. This shareholder was M Limited. And that's why this 80% which H acquired, this was acquired from whom? M. And that's why this 100 got reduced to 20. Okay, so that's the point which we discussed. Understood? The whole
Sir,
idea to
इसमें
discuss in this example was that in a company which becomes a subsidiary, minority interest could also be there. Yes, tell me, Rashmi. I think you have some more clarifications.
yes, sir. Sir, it means MLT is the agree to give share the HLT.
इसमें, sorry, can you please repeat?
यस मतलब हैव कंट्रोल उसका 100% कंट्रोल है तो ये एग्री होगी कि हाँ मैं दूंगी 80%, तभी तो ये रिसीव कर पाएंगे ना 80%.
Yes, yes, obviously. So what is your question?
सर यही क्वेश्चन था कि ये इसका ही डायरेक्ट कंट्रोल है, यही ओनर है, तो इनडायरेक्टली रिसीव
नहीं, देखो, इसका कंट्रोल रश्मि था, इसका कंट्रोल था अप टू 1st जून. इसका कंट्रोल अप टू 1st जून था. उसके बाद कंट्रोल नहीं रहा. उसके बाद दिस कंट्रोल हैज गॉट शिफ्टेड टू एच. Now, if your question is, sir, why would M give the control to H? Because M will get money. So shareholder will get money. So let's suppose you hold shares of a company. Okay, Rashmi, let's suppose you hold shares of a company XYZ Limited. Okay. And let's suppose you bought those shares at rupees 10. And I come over. I am saying that, Rashmi, I am happy to pay you rupees 20 per share. So will you sell that to me or not? You'll say, okay, I want to make money, so I'll just sell the shares. And thereby what will happen? Earlier you had the control, now I'll get the control.
Yes, sir, I
Obviously.
got it.
Okay.
Okay, sir, clear, sir.
Sure. So I think now I've got one more query from Kiran. Yes, Kiran, please go ahead. Yes, Kiran, what is your query?
Hello.
I think yes, Kiran.
I have a doubt regarding additional depreciation on revaluation profit.
Okay.
So how we calculate this profit in page number 10.32, study material.
So I think let's not talk about study material. Let me just go back to the example that I have discussed. In that example itself, I'll just explain you. Let us try to understand that there are two things which are attached to it, which we have tried to discuss over here. One, that why additional depreciation is computed. Additional depreciation is computed because the value of PPE has gone up. If the value of PPE will go up, additional depreciation, or you can say depreciation on the revaluation portion will have to be computed. So
Yes.
that's the rationale. Okay. Now comes the point that, okay, fine, I have understood that this is how, or this is why this has been computed. Now, what do you do with this depreciation? See, this depreciation is going to impact the profits. Yes or no? This will impact the
Yes.
profits, or you
Yes.
can say eventually the reserves. So now these reserves or the profits belong to whom? There are two owners in our example. One was H, other one was minority. So that's why if the reserve will go down by 1500, so where will this amount go? This will go proportionately to H and to minority interest. Now, what will you do with these adjustments? So as we'll move forward, we'll be looking at detailed illustrations. So wherein we'll incorporate all of these adjustments. So currently we are just discussing small steps as to what all adjustments you are going to see in case of consolidation. Okay. So eventually when we'll prepare balance sheet, P&L, we'll move all of those adjustments, and therein you will get absolute clarity as to how these amounts are going to get going to impact all of these items. We'll also be solving goodwill, we'll also be computing capital reserve. Yeah, all of those aspects will cover. Understood, Kiran?
Yes, sir.
Sure. So I think we can just conclude our session for today. And I would request everyone that in the next session, we are going to continue with consolidation, which is about AS21. And we may also touch upon maybe AS23 or 27 as the time will permit. But please come prepared. Please make sure that whatever we have discussed, you come after revision of that. And also make sure that you are going through all of these topics. Okay. You can also start practicing questions whichever way you feel comfortable, right? Yeah. All right. So thank you everyone for your time again and for your wonderful participation today. Thanks so much.
Thank you, sir.
Thank you. Yes, over.